Imagine waking up one day to a headline that says, "Every country on Earth is now in debt." But wait, if every government owes money, who is collecting it? We're told national debt is just part of how the economy works. We hear numbers in the trillions, like they're simply abstract figures floating somewhere in the financial sky. But behind those numbers are real lenders, real power, and real influence. So here's the question no one seems to ask. If every nation on the planet is borrowing money, where is that money coming from? Who has enough wealth to lend to entire countries? And what does it actually mean for you, your job, your future, your life? Let's pull back the curtain. To understand this problem, we first have to understand what national debt actually means. Because unlike personal debt, where you borrow money from a bank and pay it back over time, national debt is something entirely different. It's not just a bill sitting in a drawer waiting to be paid. It's a system that every modern country participates in, whether they are wealthy superpowers or small developing nations. When you hear that a country owes $2 trillion or $10 trillion, that doesn't mean someone came knocking on the door and demanded a check. Instead, countries borrow money by issuing something called government bonds. Investors buy these bonds expecting to be repaid later with interest. Those investors can be corporations, banks, foreign governments, financial institutions, and sometimes even the country's own citizens. But this is where things get strange. Because if every country is borrowing, and all of them are in debt, then the system only works as long as someone somewhere is constantly lending. And that means there must be a group, or several, powerful enough to fund entire nations. So who are they? And why do they have this kind of power? To answer the question of who countries are borrowing from, we need to step back and understand how modern money works. Because it's not what most people think. Money isn't backed by gold or silver anymore. In most nations, money is created and controlled by a central authority called a central bank. In the United States, it's the Federal Reserve. In the Eurozone, it's the European Central Bank. In the UK, it's the Bank of England. And almost every country has its own version of this institution. These banks don't print money in the way people imagine, stacking bills on a conveyor belt. Instead, most money today is created digitally, simply by typing numbers into a ledger. When a government needs more money than it collects in taxes, it doesn't run out. It just issues government bonds, essentially IOUs. Investors buy these IOUs, and in return, the government promises to pay them back later, plus interest. So the national debt is not a pile of cash owed to one entity. It's a constantly shifting network of obligations between governments, banks, companies, and investors. And because the system is so large, trillions and trillions of dollars, no single person or institution controls all of it. But the important part is this: countries don't borrow money because they're irresponsible or broke. They borrow because the global financial system requires constant borrowing. Debt fuels spending. Spending fuels growth. Growth keeps economies stable. It's like riding a bicycle. The moment it stops moving, it falls over. For the global economy, debt is motion. And because every country participates in this system, the total amount of global debt just keeps rising. It was around $80 trillion in 2000. Today, it's over $300 trillion, more than 3 times the value of every product and service produced on Earth in a year. So now we have a better understanding. Countries borrow money by issuing bonds. Investors, banks, and governments buy those bonds, and central banks keep the system running by ensuring money continues to flow. But that still doesn't answer the real question. Who specifically is providing the money that keeps every nation in debt? To understand that, we need to break down the actual lenders. When a government needs money, it issues bonds. But who exactly is buying them? The answer isn't just one group, it's a layered system of lenders, each with their own motivations and influence. And understanding who these players are reveals a lot about how the world really works. 1. Other countries' nations often lend to one another. For example, Japan and China are two of the largest foreign holders of US government debt. They don't lend out of charity. They do it to keep trade stable and to protect the value of their own economies. Lending becomes a form of diplomacy, a quiet, invisible negotiation happening in the background of global politics. 2. Banks and large financial institutions. Major banks, like JP Morgan, HSBC, Deutsche Bank, and investment firms like BlackRock or Vanguard buy huge amounts of government bonds. For them, bonds are a safe place to store money while earning predictable interest. These institutions often manage the retirement funds, insurance portfolios, and corporate reserves of millions of people. So in an indirect way, your savings may be financing national debt without you even knowing. 3. Central banks. Sometimes, the lender is the country's own central bank. When economic stress hits, central banks start buying their own nation's bonds. This is called quantitative easing. It's a way to inject new money into the economy. The money isn't coming from taxes or exports, it's created digitally. This is one of the most misunderstood parts of the system. A country can borrow from itself. 4. Private investors and wealth funds. This includes hedge funds, sovereign wealth funds, and high net worth individuals. For them, bonds are a strategic tool. They don't always buy bonds because they believe in the country. Sometimes they buy them because bonds can be used to gain leverage or influence markets. 5. The multinational lenders, IMF and World Bank. When developing or struggling nations need money, they often turn to the International Monetary Fund or the World Bank. These institutions lend money with conditions, sometimes requiring countries to change their policies, their spending, or even their industries. Critics argue that these conditions can reshape entire nations' economies and priorities. So when we talk about national debt, we're really talking about a web of lenders, governments, banks, investment giants, and global financial institutions. But this leads to a deeper, more unsettling question. If all of these groups are lending money, says, where did they get the money from? To understand that, we need to uncover how the global debt system actually functions. The global economy might seem complex, but at its core it operates on a simple principle. Money flows in circles. When countries borrow, spend, invest, and lend, the money doesn't disappear. It just moves to a new place. And the entire world is built on keeping that movement going. To see how this works, imagine a loop. A government issues bonds to raise money. Banks and investors buy those bonds. The government uses the money to build infrastructure, pay workers, fund public services, maintain the military, and support its economy. The workers who earn that money deposit it back into banks. The banks then use that money to buy more bonds, make loans, or invest again. The money has completed a cycle, but here's where things get interesting. The system is designed so that the cycle never ends. Governments rarely, if ever, pay off their debt completely. They simply issue new bonds to pay for old ones. This is called rolling over debt. It's like replacing your old credit card balance with a new one, but on a national scale. The reason this works is because trust holds the system together. As long as people trust that a government will continue to exist, continue to tax, and continue to function, its bonds have value. The moment trust breaks, like in hyperinflation or collapse, the system can crumble. But under normal circumstances, the system keeps expanding. More loans, more bonds, more numbers in digital ledgers. The global money supply grows, and so does the global debt. In fact, the majority of money in circulation today did not come from printing presses. It came from lending. Every time a bank issues a loan, new money is created, not taken from a vault, created. The repayment, with interest, is what keeps banks profitable and governments dependent on continual borrowing to stimulate economic activity. So when we say the world is in debt, what we're really saying is the world is constantly creating new money. That new money exists because of debt, and the system needs the debt to survive. It's not that debt is a glitch in the economy. Debt is the economy. Which brings us to something most people never realize. If every country tried to pay off all its debt tomorrow, we wouldn't just run out of money. We would erase most of the money that currently exists. That leads us to the next crucial question. If the system is designed to keep debt growing forever, then what does that mean for us? And who benefits most from keeping it this way? Here's the part that surprises most people. National debt is not meant to be paid off. Countries don't work like households. When you or I take on debt, we eventually have to repay it or face consequences. But a government's goal is not to reach zero debt. Its goal is to keep its economy growing, and debt is one of the primary tools that allows it to do that. Think of the global economy as a giant engine. Debt is the fuel. Without it, the engine slows down. Businesses invest less, governments spend less, people earn less. And when that happens, economies shrink. Shrinking economies are dangerous. They lead to unemployment, recession, instability, and sometimes collapse. So to avoid that, countries keep borrowing, not because they're reckless, but because the system requires it. But here's where the twist becomes deeper. Because debt constantly grows, the power of those who control lending grows with it. If a government needs to borrow money to function, to pay teachers, soldiers, doctors, and builders, then the lender holds leverage. The lender doesn't just earn interest. The lender earns influence. This influence may not look like dramatic takeovers or demands, but it appears in subtle ways. Which industries get supported, which alliances get formed, which laws get prioritized, which currencies get protected. Debt quietly shapes policy, power, and global relationships. So when we ask, if every nation is in debt, who are we owing? The answer is not a single villain behind a curtain. It's a system where money, influence, and policy are interconnected, and debt is the thread that ties them together. And in this system, there are certain players who benefit more than others, because they're the ones who collect the interest, manage the assets, and hold the leverage. So the real question now becomes, who are the beneficiaries of this ever-expanding cycle of global debt, and what do they gain from keeping the world owing? So if every country is in debt, and the system is designed to keep that debt growing, then someone must be benefiting from this ongoing cycle. The answer isn't a single person or a secret group hiding behind closed doors. It's a network of powerful financial actors who profit from lending, interest, and asset ownership. Let's break them down. 1. Global financial institutions, investment firms like BlackRock, Vanguard, and State Street manage trillions of dollars in assets. They don't just hold stocks and real estate, they also hold vast quantities of government bonds. When countries borrow, these institutions earn interest. They become, in a sense, the quiet landlords of nations. Their influence is subtle but enormous, because when you control the debt, you influence the decisions of those who owe it. 2. Major banks don't just store money, they create it through loans. When a bank lends to a government, it's not handing over savings from a vault. It's generating new money through credit. The interest paid on that loan becomes profit. The larger the debt system grows, the more money banks can create and earn from it. So banks benefit from a world where debt never goes away. 3. Wealth funds and the ultra-rich large sovereign wealth funds, like those in Norway, Saudi Arabia, and Singapore, invest globally in government bonds. They collect interest from dozens of countries at once. Meanwhile, billionaires and major family investment offices use government bonds as a way to store and grow wealth safely. Their fortunes expand quietly, predictably, powered by the taxes, work, and productivity of entire populations. 4. Central banks. When central banks buy government debt, they're not only stabilizing economies, they're also shaping them. By controlling interest rates and liquidity, they determine how much money flows through society, how easy it is to borrow, how expensive it is to live. These decisions influence wages, inflation, housing costs, the price of everyday life. So who benefits? The people and institutions who own the debt. The ones who earn interest instead of paying it. The ones who have enough capital to lend to entire nations. Not because the system is rigged in secret, but because the system was built this way from the start. So what does all of this mean for regular people? If global debt is always growing, if countries must keep borrowing, and if powerful financial institutions profit from that debt, how does it affect your daily life? The answer is, in almost everything. When a government owes money, it has two ways to manage the cost. It can raise taxes, or it can print more money through its central bank. Both of these choices affect ordinary citizens. If taxes rise, you feel it directly. Less money in your paycheck, higher costs for basic services, more pressure to work just to maintain the same lifestyle. If more money is printed, prices rise. This is inflation, the silent tax. Your grocery bill increases, rent goes up, interest rates fluctuate. Your salary doesn't stretch as far as it used to. Meanwhile, the institutions lending money to governments earn steady, guaranteed returns, even during economic uncertainty. The more the cost of living rises, the more people depend on loans and credit just to get by, which feeds the system further. So while debt helps keep the global economy moving, the weight of that system is carried by everyday workers. You work more, but feel like you have less. You pay taxes that service national debt you never agreed to. You live in an economy where debt is required for growth, but growth doesn't always return to you. This is why conversations about global debt matter. They're not abstract, they shape the price of your home, your food, your education, your opportunities. If debt is the engine of the world, then citizens are the fuel. So if every nation is in debt, who are we really owing? We are owing the system itself. A system built on continuous borrowing, continuous lending, and the belief that growth must never stop. Governments borrow to keep economies running. Banks and financial giants lend because it allows them to expand wealth and influence. Central banks control the flow of money to keep everything moving. No single person sits on a throne collecting payments from entire nations. Instead, the lenders are woven into the structure of global finance, investment firms, banks, wealth funds, and institutions that profit from interest and stability. Debt is not a flaw in this system. It is the foundation of the system. A world without debt would be a world without the currency, investment, or growth we currently depend on. So the real question isn't who do we owe? The real question is, who gets to shape the world by controlling the debt that keeps it running? If this video helped you understand the world a little differently, make sure to like the video. It really helps the channel grow. Share your thoughts in the comments. Do you think the global debt system works, or does it need to change? And if you'd like to see more deep dives like this, subscribe. There's much more to uncover about the world we live in. Thanks for watching. Stay curious.